Hello everyone, Joshua Hayes at bigwavetrading.com. In case you did not know, I put out a video lesson on Thursday. I recommend, if you have not watched that video lesson yet, to please watch it after you watch this one, as it will explain more. So this is going to be a longer video lesson than normal. I apologize, but we need to explain where we're coming from, where we're at, and where we're going. First things first, I want to go over what kept us safe in this most recent rally in the overall market. The first things first, we're going to look at the hourly time frame of this tickets indicator. Remember what I've said before in these video lessons. Anytime it's below the 50 SMA and this indicator is above zero, especially if it's uptrending, it's a buy. Buy, buy, bounce, bounce, buy. Now here you can see the indicator was fading. Here the indicator was rolling over. Now price is back again over the 50. This time, this indicator is at the zero line, actually below it technically. Next thing you know, it fails. Now here, we bounce above the 50 SMA. This indicator is above the zero line, and very rarely will it ever get above the 200 SMA with the 50 below it, with the indicator still below zero. And my goodness, I did not take this short, but what an opportune short signal if you are actively watching this on an hourly time frame. Very, very, very impressive, the move down. So that hourly time frame is what kept us safe with the 1 day time frame. If you'll look below, you'll see it's still above the zero line, but now we're below the 50 and the 200. Indicator is above zero, but moving down towards it. So this is not an inverse move unless if it reclaims the 50 and the 200 in the next couple of weeks and this indicator is trending up. It could be, but we would need to match it up with the hourly time frame. And if you watched last week's video lesson, you might already know the weekly is not confirming, so that's why we always look at the lower time frame with the daily even above the zero, because we know the weekly is above the zero. As long as the weekly is above zero, I will never, ever, 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 ever be able to get aggressive with any new long position that is not a grade A signal. So what kept us really safe during this entire uptrend was the pure, and I've complained about it in many, 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 many video lessons to members and even on these weekend video lessons. I have never had a rally off of any low go this long without any grade A signals. We had some close ones, but still, there weren't really any grade A signals based on what I look for with my setups, based on low risk, extremely high reward setups in non-can slim quality names, and based on can slim stock quality names setups. They just weren't there. So this weekly tickets indicator kept us safe, but the other indicator that kept us safe we'll take a look at is on Telechart version 20 and 23 now. They have a new version. So this is the most important indicator that I use to really tell me when to be aggressive with new long positions and when not to be aggressive. This indicator right here, the time segment volume, 24 period, 12 SMA, which is what changes this from green to red, and especially whenever it's below the zero line and red is bearish. And when it's above the zero line and green, it's really bullish. That's when you really want to press the pedal, especially on grade A setups. But you'll notice during this entire bounce, it has stayed red the entire time, along with the MACD. So even though CMF is still green, we got that weekly tickets indicator below zero saving us. We got this monthly time segment volume and MACD, both bearish the entire time, preventing us from getting long our grade B signals. So that's what kept us safe during this rally. Also, I've made mention many, 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 many times, the VIX never ever got above 40 during this entire decline in the stock market. I have always seen the VIX over 40 with any real bottom. I have never not seen the VIX over 40 during any real bottom in my entire career. And while I thought this was 1994, but after everything that just happened on Thursday and Friday, it's quite possible this is not the late 1970s all over again. I mean, can you imagine if we have systematic banking risk while at the same time runaway inflation like we currently have? What is the Fed going to do? Which direction does the Fed go? It's really an amazing time period right now. So without that Fed pivot, without quantitative easing, without them buying assets on their balance sheet, without that VIX over 40, without passive retail panic selling, weren't they just record net buyers recently here on that most recent rally in the stock market? I believe this little uptrend right here, retail came back even stronger than they were in early 2021. Now, what did I personally read wrong about this entire uptrend? Well, I got to admit, from the October lows, I missed my SPY 350 in the long-term portfolio by just a couple of points because I didn't get my close below 350. But I never FOMO'd into the long-term portfolio. In fact, I still plan on doing that 50% add below 350 in the SPY. But retail recently slammed into the stock market, and now you can see what's happening. So what I really read wrong with all of this is that there was a record amount of grade B signals. I mean, a record amount of grade B signals, but no grade A signals. There were bread thrust. There were multiple pocket pivot point signals and follow through days on all of those pocket pivot point signals. So it became very difficult to want to fight that with the bread thrust, also with new highs now outpacing new lows, with the IWM leading at the time. And look at this. So look at the SPY with all of these key long-term moving averages. Notice that we're below them all now. Look at the QQQ starting to crack through them. Notice the DIA breaking down below. But look at what the IWM has done the last 2 days. That's wild. It was showing some leadership via relative strength, which we can actually look at on Telechart version 7. All right, everyone, we're looking at Telechart version 7 now. The relative strength line is on the bottom panel, and this is the SPY, but it's the relative strength versus the S&P 500. After Thursday and Friday, big sell-off for the QQQ, I want you to notice the relative strength line, the DIA. Now I want you to look at the IWM. Ugly short-term reversal. Now, from the October lows, you will see the IWM on a relative strength basis has been leading. This is one of the positives. Now, remember that monthly time segment volume indicator I showed you on Telechart version 20? When that is combined with a VIX under 20 and the IWM leading the SPY, and I get grade A signals, great things happen. Great things happen. When they're mixed, obviously, if it's 100% of something, great things happen. If it's 90% of anything, 90 times out of 100, good things happen, great things happen. 10 times it doesn't, and 80% and so on. So the more of these indicators and events and metrics, like the Fed is under quantitative easing, unlimited QE, like at the 2020 bottom, and we had the monthly TSV green, and we did not get the VIX under 20, and that was the tough part about the volatility, I do believe, in holding individual stocks during that period. But there were great leaders that still came afterwards later in 2020. Whenever more and more of these items that I've discussed in this entire video lesson are lined up, great things happen, especially with grade A setup. So now that we're actually on Telechart version 7, I want to show you charts that came very close to being grade A setups. So whenever things are aligned, this is what you want to look for. Okay, everyone, so speculative grade A signals. This is what we got earlier when the market was rallying in the summer. SECO, right here. This was a new long signal. Let's see. Bam. Okay, so now you see this. You'll see how it was right off the 50, right through the 200. You see all this max, what we call max green balance of power. It calculates the volume and price action over the last 30 days. You see this volume truncation bar. You see how that we consolidate sideways. This was a great signal. This was a good signal. This was a great signal. But still, it didn't have a lot of power behind it. It wasn't a wonderful, wonderful A+++ signal because there's no volume surge. There's no pocket pivot point signal on the day. Another stock that came close enough. We'll call it close enough. Was DCFC. I believe that I have the wrong ticker. DFCF. No. I am so sorry, guys. I am so sorry. Oh, hold on. DCFC. Okay, so that's DRCT. My mind. It's awesome, but it's always a little late. So right here, similar situation, max green bop, volume truncation, right off the 50, you can see the big price move, okay? So DCFC was the closest one during this entire uptrend. You can see here, I don't know why my arrows are missing. Hold on. Okay, so the arrows are here. So this is whenever I entered. This was the signal. I entered the next day, and currently, how much is Seco up? 142%. Okay, so DCFC, you'll see here, you see the triangle. So I've already entered the position based on a setup that I saw based on the price, volume, and BOP structure. Then we had this day here, and I tell you what, guys, if you give me heavier volume, a pocket pivot point signal, that's a grade A setup. And on this day right here, you got that candle, over candle, off the 50. You got the pocket pivot point signal. You got the heavier volume, but it's still below average. And look at what the balance of power bar did. It fell. Normally, you want to see it hold on to that max green bop level. That being said, oh, voila, it worked pretty perfect. But here's the problem. We're not in a bull market, so it didn't continue. So there is one. Then I want to show you guys a grade A cancelim setup, FSLR, but this is a grade A cancelim setup. The pocket pivot point signal, the above average volume, the increase in BOP right off the 50. Unfortunately, earnings were right before the signal. That being said, it still worked. You can also see there's a white triangle. We already had a position before the earnings. The same with DKS. I actually gave this out to everyone in last weekend's video lesson. Congratulations to everyone that took the trade with me. I added to the position, but once again, it's grade A, but it's hard to call it grade A, load the boat ahead of earnings because earnings, you never know what's going to happen. This time, once again, it was good. AXON. Once again on AXON, you can see another white triangle because I am long from earlier. That being said, this is another grade A can slim quality setup. Notice the volume truncation of the previous volume bars. Too bad it had earnings that very evening. And then recently, TH. I told everybody in my chat room, in the platinum section, this is a grade A setup in a can slim name. Once again, even though it is below the 50, unfortunately, it has earnings. It still, so far, is working out. But that being said, other high quality setups, ASC from here, this was close, but no cigar. It still worked. This is what it looked like on the day of the signal. This is a high quality can slim name. It has worked out. WFRD is one of the best ones. I've discussed this one over and over and over. This was the best signal here. 50% gain. That was the grade A signal. TTC failed. It kind of gave me a grade A signal. Initially worked, failed, started to work again, failing once again, and then one is completely rolled over. ACM, this signal right here, not quite, but close, because it's canceling quality, but now it's failing. So that's what we're going to be looking for going forward. And I don't have any examples of a high reward, low risk setup outside of a can slim or a purely speculative name during this entire uptrend, which gets back to the point. The lack of grade A signals is what kept us safe. But the grade B signals is what allowed me to get long a lot of stocks in this market. However, members know that I size down to the smallest size I have ever been in my entire professional career on the end of day basis. At any point during this entire uptrend, you can ask any member, did I ever increase size heavily in any long position? No. What I did do was remove break-even stops a little too late after adding them too late again. Then I removed them too late, but I barely increased size at all on the best names. I kept that size extremely, extremely small. It's not even a toe in the water. It's a pinky toe in the water trades because I like to keep a feel on the market because if those start working, then I can add size and so on and so forth until I get the grade A signals. All right, so now, what now? What now? Well, guys, I got some bad news. Remember what I said? I don't know how many video lessons it's been, but I've constantly have told you guys, Without passive retail panic, without that VIX over 40, without a Fed pivot, it's really hard for me to think that we're going to bottom after this long of a bear market with all the systemic problems that should be out there with the rising yield. And I know a lot of people are always worried about the black swan coming from the war side, but I told you guys, we love war as a country. It's what gets the industrial machine pumping. It's what gets the economy moving. It gets things going. It's just the history, it's just the facts and reality of the war machine in this country. So whenever you think of a war as being the black swan event, I told everybody, nah, I'm bullish if that happens. I'm very bullish. I'm bullish on any war. Just like in Europe. Everybody thought that was going to be the end of Europe. What, the CAC 40 is hitting new highs, new all-time highs? Not anymore, but it was. So, no. I warned everybody, I'm worried about it coming from the credit or the banking sector. I'm really worried about, systemic risk showing up there because that's what was really bad in 2008. Well, it appears it's here, especially, you got SI already, and SI is already really, really worrisome after FTX. But then what just happened with SIVB, now I'm really, really curious. I mean, just in Hawaii, where I'm from, First Hawaiian Bank, Bank of Hawaii, Charles Schwab, there's some ugly, ugly, ugly ugly. This is the KRE. There's some ugly charts out there. You'll notice there's a lot of red on it, a lot of red, a lot of ugly price action, and the IWM's rolling over. Now, I like to always say, I like to pretend like I live on an island. Ha 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 ha, dead joke. Live on Maui. I want to remind everybody, I've been doing this for a living for over 20 plus years on the island of Maui, one of the most expensive places to live. And this has been my income living out here the entire time. So I may not be the best trader, but I'm a damn good trader. But what I know is that I know my market analysis and I know what we're looking at. So we are set up like 2008 now. That systemic risk that I've been warning about showing up in the credit and or banking sector. I thought it was going to show up in the credit side, which it kind of has with the way that it's played out with SIVB. But now we are set up for either a waterfall moment like we saw in 2008 and or straight up a crash. Does not mean it has to happen. So this goes back to my, if I was on an island without any news, I had no idea about SIVB, if I had no idea about anything going on, and if I didn't know that Friday was quadruple witching, and I look at this, I'm like, oh my God, sell it all. Whatever I'm long, sell it all. That's really bad. That's what I would think as someone that's been doing this for a living for over 20 years. I would think, okay, that's not good. If I didn't know anything about the news, this reversal like this, back below the 50 and 200 on the heaviest volume since that October low, that would not be good to me. Quadruple witching or not. Remember, I don't know what's quadruple witching on this island. QQQ, not good. That's not good. DIA, well, that's not good either. So I can't see this as being a positive short term. Doesn't mean it's going to happen, but remember how I said that the passive retail, guys, I lived and traded through 2000 to 2003, and I remember in 2001, and retail never panic sold until 9/11. And once 9/11 happened, retail finally panic sold. In 2007, 2008, I can't really remember when the panic selling started, but I know the Bear Stearns moment, the AIG moment. I just know that it was just a steady, long sell-off, and it's possible that that could happen. You never know. We're just set up for a crash. It doesn't mean that it's going to happen. How am I positioned currently? Currently, my time frame of focus is intraday. So just to let everyone here know, intraday, I'm going to go to my intraday charts. Okay, so the intraday time frame remains my time frame of focus, and in the morning I gave only 2 trade ideas, only 2. I told everybody buy stop above 250 on UNCY. UNCY triggered. If you use VWAP as a cut loss and or the logical level, UNCY went from 251 all the way to 286. I get two ideas. UNCY. What was the other one? SI, dip and rip. Not a big fan of dip and rips right now at all. They're not working. I love these day 2, day 3 movers like UNCY. SIs haven't been working. No, there's the dip, no rip, no trade. So just one idea, UNCY, profitable. Then I talked about LUNR, green, red, red to green. This is wrong. 1620 was the red to green level. LUNR, 1620 to 1950. Then midday, EUDA over 270. This one failed, but the second one would have worked with break-even stops, but if not, this one would have failed. So this trade failed. But the bottom line is UNCY still worked. But I go over this because this remains my time frame of focus. I am cash heavy on an end-of-day basis. The most I got long, thanks to the complete absolute lack of grade A signals during this entire uptrend, was 33%. That was my max long position in my end of day swing account. I am now over 90% cash in my end of day swing account following all the stop runs on Thursday and Friday. Remember, small size, aggressive, tight stops, no harm, no foul. Didn't even affect the account at all, this most recent. Am I red for the year? I sure am in the end of day swing account. Am I green for the year in all of my day trading accounts? I sure am. Do I have a drawdown in my main day trading account? I sure do, but it's not bad. But I know right now it's not time to trade in that account because the dip and rips aren't working. When they start working again, we'll get back to working there. But besides that, the other day trading accounts are at or near all-time highs. The end of day account is red year to date, but it's barely red. But guess what? The greatest trader of our generation is also red for the year. So I'm in good company. I'm not going to get too upset over it. End of day position account has been cash ever since the October lows. I have an account at E-Trade where I want to do 25% per grade A signal, or if I could get any signal, I'll just do 100% is what I kept saying since the October low. And here we are the entire time, not one single grade A signal. The end of day position account remained cash the entire time from the October lows because there were zero grade A signals that came either after earnings or, as I was showing you, like DRCT and CECO. There's others I could have shown you too if I would have done any amount of research before I made this video lesson. And then DCFC. So there was nothing to do there. Quarterly portfolios. I only went 25% long in the quarterly portfolios the last quarter, and those quarterly portfolios, the quarterly portfolio A and quarterly portfolio B, beat the S&P 500. But I only had 25% of my money at work, so guess who underperformed the S&P 500? Me. But guess what I've done this quarter? Nothing. 100% cash, just like I said I would be outside of quarter four during a QT market. And this is a QT market. And long term, this is the one that everybody should be paying attention to because I'm not deviating from my game plan that I've had ever since I started to sell for the first time in my long-term portfolio since 2008. Right here. This is when I started to sell. This is when I went 50% cash in the long-term portfolio. I started to add back at SPY 400, SPY 380, was going to do a 50% add at below SPY 350, and I still am. Once SPY closes below 350, I plan on doing 50% of all my long-term accounts into SPY, and I also would like to do SPXL back on the way up through these levels if we continue to sell off. But besides that, the game plan remains the same. SPY 350, below 350, 50% add. SPY gets to 320, buy a little bit more. SPY gets to 300, I'll buy a little bit more. SPY gets to 280, I'll buy a little bit more. And if SPY gets to 250, based on historical precedents, unless this is the one and only time, 1929 to 1932, where we're going to decline 90%, the most the market ever goes down is 55%. That puts us around SPY 250. That's where I plan on doing the full add. So for right now, the focus is intraday only and long-term ads until I can either get any grade A signals on the end of day swing basis and or I can get any of those metrics I discussed earlier in the video to line up. And I want to remind everybody, I am still not a secular bear, but here's what it will take. Once the SPY closes below the 200 weekly SMA, rallies back to the 200 weekly SMA, and then fails to get back and stay above it, we've got problems. Looking out on this chart, we can go back 2000, 2001, failed to get back above it, bad things happen. 2008, get below it here, fail to get back above it, bad things happen. So that's what I'll be looking for on the SPY. QQQ, same thing. DIA, same thing. And I want to show you something. The IWM, still, I got to see us get below, fail to get back above, start to roll over again. That's when some really, 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 really bad things can happen. All right, everybody. Hey, listen, if you learned anything in this video lesson at all, if you enjoyed it, whatever, please give me a like. I would really appreciate it if you guys could share it with your friends. Leave any comments. What do you think the market's going to do? This is a really, what if I keep saying in these video lessons? Chop, 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 right? Chop, 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 chop. Bulls, bears. Chop, 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 chop. I got to be bearish short term from the October lows because now I got bread thrust. Now I got follow through days. Now I got pocket pivot point signals. Got a bunch of grade B signals, but where's my grade A signals? Where's my VIX over 40? Chop, 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 chop. I want to be bearish, but I got this going, against me in the market. I still got all these stocks like ANET. I got all these stocks hitting like new highs. FSLR. Chop, 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 chop. So let me know what you guys think in the comment section. I'm really, really, really curious to know what you think this market's going to do. I know what I think it's going to do. I don't think it's going to be good, but, I don't know. Anything could happen. On Monday, here's how you know that's not going to happen. The 2008 or crash or sell off or pullback scenario. On Monday and or Tuesday, if we get a 3% reversal, if we reclaim the 50 SMA on the IWM or the SPY on heavier volume, which I don't know how that's going to happen from the quadruple witching day on Friday, then it looks like we're going to bounce back. But still, there's a lot of things that need to line up before I can even think about getting aggressive outside of any time frame other than the intraday time frame. And I only focus on a few stocks per day. My service is very inexpensive. If you want to come join the team, feel free to join from the register page. The link will be below in the description box. Very nominal, inexpensive fee for everything that we've discussed. I put it all out there, all trade ideas I give to you before I take them on my end. Intraday, end of day, quarterly, long term. I tell you exactly what I'm going to do before I do it. Thank you for watching this video lesson, everyone. Once again, I love you guys. Have a great rest of your weekend. Aloha.